Welcome back to the Community Corner podcast, where we explore the companies in the S500 through the lens of behavioral finance. I'm Arnav.
And I'm Nikhil. Today, we're focusing on Equinix, Inc., a global leader in data centers and interconnection services. Equinix operates one of the world's largest networks of data centers, enabling digital leaders to interconnect with each other and access key markets, partners, and customers. We'll be discussing how behavioral finance impacts their decision-making, diversity and inclusion efforts, adaptation to different markets, and how they compare to other companies in the industry. Let's get started.
Equinix has been a key player in the data center industry for years. From a behavioral finance perspective, how do biases like the status quo bias and the anchoring effect influence their decision-making, especially in areas like infrastructure investment and customer engagement?
Status quo bias is particularly relevant to Equinix's approach, especially in how they manage their vast network of data centers and interconnection services. In the data center industry, companies and their customers often prefer to stick with established and reliable providers to avoid the perceived risks associated with switching. Equinix leverages this bias by emphasizing the reliability, security, and scalability of their services, encouraging existing customers to remain with them rather than exploring alternative providers. This bias helps Equinix maintain a stable and loyal customer base, reinforcing its leadership position in the industry. The anchoring effect also plays a significant role, particularly in how Equinix approaches pricing and market expansion. Equinix's customers may anchor their expectations of service quality and pricing based on their existing contracts or past experiences. By maintaining consistent service levels and pricing models, Equinix ensures that customers view them as a dependable partner, which in turn anchors their expectations for future engagements. This approach helps Equinix secure long-term contracts and expand its market presence.
And this focus on leveraging the status quo bias and the anchoring effect has helped Equinix maintain its leadership position in the data center and interconnection services industry, appealing to both customers and investors who value stability and reliability.
Exactly. Equinix's strategic use of status quo bias in customer retention and the anchoring effect in pricing and service quality appeals to investors looking for a company that balances innovation with reliability. However, this approach also means that Equinix must carefully manage the risks associated with technological advancements and competitive pressures, particularly as the data center landscape continues to evolve with new demands and market entrants.
Let's talk about diversity, equity, and inclusion at Equinix. As a major player in the technology infrastructure industry, DEI is particularly important for Equinix. How does this intersect with behavioral finance?
Equinix's approach to DEI is crucial, especially as the company operates in a global and highly technical industry where diverse perspectives can drive better decision-making and innovation. From a behavioral finance perspective, strong DEI initiatives can enhance Equinix's ability to innovate by fostering a culture that values diversity and inclusion. A commitment to DEI allows Equinix to attract and retain top talent from various backgrounds, which is essential for maintaining its competitive edge in data center and interconnection services. For investors, Equinix's focus on DEI can signal that the company is socially responsible and aligned with modern societal values, which can enhance its reputation and appeal to ESG-focused investors. Additionally, DEI efforts can help Equinix build stronger relationships with customers, partners, and communities, reinforcing its brand as one that values inclusivity and ethical leadership.
Investors are increasingly considering DEI when evaluating companies, especially in technology and infrastructure, where the ability to foster inclusivity and innovate is critical to long-term success.
That's right. By embedding DEI into their corporate culture and innovation processes, Equinix not only improves its ability to serve a broad range of stakeholders but also strengthens its market position and attractiveness to socially conscious investors.
Moving on to global markets, Equinix operates in numerous countries, providing data center and interconnection services to organizations worldwide. How does the company adapt to different markets, and what role does behavioral finance play in this?
Equinix's global strategy involves tailoring its data center and interconnection services to meet the specific needs and regulatory requirements of different regions while maintaining its core focus on reliability and security. From a behavioral finance perspective, this adaptability is crucial for managing the risks associated with operating in diverse markets. Equinix's ability to navigate complex international regulations, such as those related to data privacy, cybersecurity, and infrastructure standards, allows it to maintain a strong global presence. The company approach to understanding local market dynamics and adapting its strategies accordingly helps mitigate risks associated with regulatory changes, economic fluctuations, and cultural differences. By ensuring that its services are relevant and compliant in different regions, Equinix can continue to expand its market share and strengthen its global brand.
And this adaptability is essential for Equinix, especially as they face competition from both local data center providers and other global giants. Their ability to maintain their brand's relevance and leadership in different markets is key to their continued success.
Exactly. Equinix's focus on understanding local market dynamics and adapting its strategies accordingly allows them to remain a dominant player in the data center and interconnection services industry while staying ahead of emerging trends and challenges. However, this also requires them to be proactive in responding to changes in global technology standards, regulatory environments, and competitive pressures.
Now, let's compare Equinix to other companies in the data center and technology infrastructure sectors like Digital Realty, CyrusOne, and Iron Mountain. How do the behavioral finance dynamics differ?
Equinix's dynamics are often compared to other data center and technology infrastructure giants like Digital Realty, CyrusOne, and Iron Mountain, particularly in their approach to infrastructure investment, customer engagement, and competition. Equinix's strength lies in its global reach and focus on interconnection services, appealing to investors looking for a company that prioritizes scalability and network efficiency. Digital Realty, with its focus on data center real estate and cloud connectivity, appeals to investors interested in a company that emphasizes infrastructure scale and flexibility. CyrusOne, known for its expertise in enterprise data centers and colocation services, attracts those looking for a company that is driving advancements in data center efficiency and security. Iron Mountain, with its focus on information management and data storage, appeals to investors interested in companies that integrate physical and digital infrastructure. Equinix's behavioral finance dynamics are shaped by its reputation for reliability, strong global presence, and adaptability, making it an attractive option for those seeking stability and growth in the data center industry.
And unlike Iron Mountain, which focuses heavily on information management and data storage, Equinix's strength lies in its specialization in interconnection services and global data center networks, appealing to a different type of investor and market.
Absolutely. Each of these companies has its own behavioral finance dynamics that influence how investors perceive their value and potential risks. For Equinix, the focus on global reach, interconnection services, and infrastructure reliability provides a unique value proposition in the technology infrastructure industry.
To sum up, Equinix's approach to business is deeply influenced by behavioral finance principles, whether it's through their infrastructure investment strategies, global market adaptations, or their approach to DEI. But like all companies, they are still subject to the biases and perceptions that can influence investor behavior.
That's right. Understanding these dynamics provides a clearer picture of what drives Equinix's stock price and where the potential risks and rewards lie.
Thanks for joining us on this episode of the Community Corner podcast. Until next time, I'm Arnav.
And I'm Nikhil. Stay curious and keep questioning the narratives.